Rob, we're seeing a bit of an improvement on markets this week following last week's sell-off and really just responding to the economic data that's coming through into the markets at this stage.
Yes, we've had negative data the whole of last week, and then some good data coming out on Monday evening on the American side, with the services sector improving for the first time in many months and moving past the 50 level, which shows expansion rather than contraction. So very positive on that side, and the markets were quite buoyed with that. We saw a very big pull-up in the market from this morning.
Of course, we were chatting a little bit earlier, Rob, and you said that the services sector is particularly important for the US economy because it really does make up a large part of output, doesn't it?
Yes, it does. It's 80% of the US economy, and a very important sector for the American economy and for the rest of the world. And expansion in that sector is what we're looking for. Obviously, the employment figures are still very poor, but as a leading indicator, that looks very good at the moment.
Of course, just following the small recovery we've seen in share prices yesterday and of course today as well, where does that take the market to at the moment? Are we testing any new support levels here?
Well, yesterday we were at very important levels on many indexes. The S&P was at support. The emerging markets were on a 6-month support level, and that data that came out yesterday in the States was helped to hold all of those support levels. So if we broke below those levels, we see about an 8% pullback that can happen in world markets, and so some good economic data helped support those levels. And it's going to be quite an interesting few days as we retest that support level over the few days as economic data starts to hit the market. If the data is good and we stay above the support levels, I think we can see a good consolidation at these higher levels rather than a breakdown. But it is slightly overbought still, generally over the last good few months. And a pullback below these levels looks like about an 8% pullback in the markets.
Of course, until recently, it looked like there were a lot more buyers in the market than sellers. Is that still the case, or do you think we're going to start to see a bit of a tussle between the bulls and the bears in this market?
There is a bit of a tussle between the bulls and the bears. There's not a lot of sellers in the market. Whether there's an excessive amount of buyers, I think people are waiting to see. The people that got into the market in March at the lows are still holding a lot of those positions. They've done very well, and they'll rather consolidate those positions rather than sell them out at the moment. And only a break below these levels will see some excessive selling coming through. So I think really on the sell side, there's not too much pressure on the market at the moment.
Of course, the focus for the recent past few weeks has really been on the economic data coming out in the United States. Of course, we have the US reporting season, the quarterly reporting season coming through, with Alcoa, the first company to report on that today. Do you think the focus is now really going to switch on to whether those companies can maintain the profit growth we saw in the second quarter through into the third quarter?
I think so. Obviously, the market has run quite ahead of itself, expecting good results from the companies. And as the quarter, all of the numbers started coming for this quarter, it's going to be very important. Alcoa's numbers are also going to be very important today. We saw copper go through to over $6,000, and all the other commodity prices have moved up quite extensively over the last 24 hours. Alcoa's numbers will be interesting to see how they see the steel industry and commodities moving forward and their outlook. If those come out very positive, I think we'll stay above the support levels and move forward. And if they're very negative, I think there will be some concern with what the other companies are going to be performing like in the next 2 or 3 weeks.
So do you think Alcoa might be seen as a barometer for how companies like BHP Billiton and Anglo American might perform in the coming period?
Well, definitely a start. Obviously, they're more specialized than a miner like BHP Billiton, but definitely their outlook going forward to see if they've seen a bottom and they're going to be able to increase revenue in the next 6 months, or they're only going to see really an improvement in the second half of next year. So that will be the important point to look at. But it will definitely be the start of something to look at and see, is there going to be some stamina in this market that will say, yes, earnings are going to get better.
Well, just on Anglo American's share price, it's back up around the 240 Rand mark, so a nice improvement there. I mean, has that really just been following the markets, or do you think some of the other news that's in the market might be affecting Anglo American as well?
Well, I think we mentioned on Thursday that it's been trading in quite a broad range, about 230 to about 267 Rand is the range. And over the last few days, it traded all the way back down to about 229. And you see a lot of buying coming in. So good technical support is the one thing that brought some buying in around that 230 level. And secondly, obviously, Xstrata now have only got till the 20th of March to put through a bid for Anglo American. Obviously, the market feels that if they don't put a premium to that, there will be no deal. So they're looking at about a 30% premium if there is going to be a deal, and they need to announce that by the 20th of October. So I do think people are coming in a little bit to see will Xstrata put a premium onto Anglo-American, or will they just leave them for the next 6 months. So also quite an important week or two for Anglo-American in that respect.
What's your feeling on that, Rob? Do you think that Xstrata can come up with something by the 20th of October, or do you think it would rather sit back and wait until the commodity cycle's recovered even more, so it can do something in 6 months rather?
Well, obviously, with the reporting coming through, they've got a good feeling of where the markets are going. If they feel there's really a big turnaround in the markets, then maybe they will pay that premium if they have enough cash on their balance sheet for that premium. And that'll be quite interesting for the market, because if they really do feel there's a turnaround, then they will pay that premium. So in the next 2 or 3 weeks, it'll be interesting to see if they come up with that premium. That's a very positive sign for the whole of the commodities and the mining industry if they do come up with that 30% premium.
Of course, we were looking at the gold price a little bit earlier, and the gold price heading around that $1,020 an ounce mark, starting to retest that previous all-time high. And of course, that's giving the rand a bit of a boost, as well as our gold miners, I should imagine. I mean, where do you see the gold price going? I know that Mark Kutsafani, the head of Anglo Gold Ashanti, was chatting about gold, and he saw it at around $1,100 for the next year. And that seems to be a little bit on the pessimistic side, I would think.
I think the all-time high is about 1,023. We're getting close to that again. I think if it does break that level, we can see it at 1,100, a very good level. Whether it can break there and go higher is still to be seen. Being not a gold analyst, I feel that we need to first break the high of 1,023 before we can really look to see if it can trade up to 1,100 or beyond. But Mark Stefanucci from Anglo Gold says he sees a range of about 950 to 1,100, and I think that's quite a fair look at the gold price, especially coming with somebody with knowledge like that.
Of course, at the same time, we have Russia and OPEC and the Gulf Arab states chatting about maybe replacing the dollar with the baskets of currencies and also including gold rather than the US dollar. I mean, do you think there's anything in that, and do you think that could lend some support to the gold price?
I definitely think there is something in that. Whether they'll be able to do that in the short term, I doubt it. I think it's quite a long-term focus and something that will have to change across the board of a variety of different commodities. But that they're talking about it and they're really thinking about it, I think it is something to look at, and the dollar is definitely losing impetus as the main currency for the world. But I think it's a very long-term process and not something that will just happen overnight.